Alright folks, welcome back. So, I've had a lot of audio issues today, and this is my final attempt to record this video. I'm not going to be doing another rendition of this, and I worked on a YouTube video earlier today as well. And for whatever reason, I'm getting this like little electronic, like really low electronic sound that usually if I have my cell phone next to me and I'm working on a video and recording, it'll pick up like some kind of feedback, and it sounds like a whole bunch of like beeping and clicking and all that. But I don't have a cell phone around me, so not sure what that is, what's causing it, but I couldn't remove it from the YouTube channel video that's going to go up after this one, and it's probably going to be in this one as well because I can't figure out what it is to fix it. So I know it's driving me crazy, so it's probably going to drive you crazy as well. Alright, so a bit of housekeeping since you're here and you're most attentive at the beginning of the video. Originally I had planned to remove month 1, 2, and 3 on March 1st, but I'm going to remind you that I'm going to be on holiday starting next Tuesday for the entire month of March. Okay, so I will not be answering emails. I will not be producing videos for YouTube. I will not be producing videos for the mentorship here. I'm not going to be creating charts. I'm not going to be doing any SoundClouds. I'm not going to be doing anything. I'm resting. I'm spending time with my family, and on April 1st, I'll be back. The entire month of March, download everything that you can. When I come back on April 1st, month 1, 2, 3, 4, 5, and 6 will be removed. That means you have an entire month. Instead of watching videos and studying and looking at price and charts, take that time, because I'm not adding anything new for the entire month of March. You have all that time. So all the time that you'd be sitting here and watching videos and studying, and then don't do that. 2 reasons, okay? Number 1, you need to take advantage of the time because June 1st, the server is gone. We'll only be operating in the forum, okay? The lessons we taught in chart format, and anything I want to share that's downloadable will be in PDF, so it's not a big deal. If something kicks off, bigger than what's already happening in the world during March, it's going to be problematic. So my advice to you is don't do anything, as I'm going to illustrate in these charts here. I'm only looking at daily charts. Take the time to download all of your content. Download everything, okay? You have plenty of time to get it. You have no reason to be afraid that you won't have time, because you have plenty of time to download them. The commentaries, like outside of the core content, save those for later. But core content, that's 8 lessons, those 8 videos at the top of each month, for month 1, 2, 3, 4, 5, and 6, and all the supportive commentaries below the core content lessons. All you're going to do is take your mouse, hover over the links for the videos. On your mouse, click the right button, and then click Save Target As. Do not use third-party downloading applications because, for whatever reason, this forum is zapping out and they're sending me emails warning me that they're not going to restore ISP addresses if they keep doing it. That means you guys, okay? I personally don't care, but it's them. It's their terms of use. So if they ban you, it's not because I'm banning you. It's they don't want you doing that. Okay, so does it take you more time to do it this way manually? Yes, it does. But it doesn't take that long. Okay, you can be downloading, 5 or 6 videos at the same time. And when they're done, there it is. Watch TV, watch, read a book or whatever. I don't know what you'd be doing while you're doing it, but all you got to do is monitor when they're downloaded, and then go to new links and download them. And for real, you can literally get this done the entire month of March. There's no reason why you can't get it done. So I'm not taking anything down March 1st. Okay? Because I don't want any drama. I don't want anybody freaking out. I don't want you calling my cell phone, worrying me when I'm on holiday. Okay? I want to try to relax and enjoy my time with my family. Which brings me to what you should be doing for the month of March. Outside of getting all your videos, in other words, if you were the ones that listened to me at the beginning and downloaded them all, none of this is a concern for you, because every time you get a new video, you've downloaded it and then you watched it, which is what I suggested from the beginning. But, everybody does things differently and procrastinates. This whole business with Ukraine and now UK is bringing in their military and Biden's bringing in more troops. In my mind, they're setting a larger stage. Okay, this whole COVID thing, nobody's talking about that right now. Notice that? Nobody cares about the sniffles. Nobody cares about wearing a mask. Nobody cares about getting that shot. It's Ukraine, Ukraine, Ukraine. Russia is invading. China's going to invade Taiwan. I personally think that we're going to see something with the internet. I think they're going to affect the internet. And while it goes down, they get to purge it of all the things that they don't want records of. So, my advice to you for this weekend and going through, at the very minimum, the first week of March, print off all of your last 3 or 4 months of your bank account statements and your credit card statements. And get copies of, like, deeds, if you own your home or whatever. Get copies of all that, titles to your cars. Do those things just to be at ease. Just to know that you have it, you have records that prove the things that you say you own, you have them, and that you don't owe any debt, and you have this much money in the bank. And how that will give you a greater peace of mind. At least it would for me. Now, you might not care, but it's something that many of you probably didn't even think about, but I warned that we could possibly see something like this happen. And good old Klaus from World Economic Forum has primed everybody for cyber attacks. So, the grid in the US, power grid, the internet, cell phone service, I see that going down. Especially because if they start doing things that they don't want people sharing the information from their local areas, that'll be convenient for them to remove communications. So, I know it sounds a whole lot like 1984, the novel, but I kind of warned you that was what we were getting ready to go into. So, don't trade. Don't trade in March. I'm telling you not to do it because I'm not going to be here to be giving you any advice, and right now it's dangerous. There's so many things that could go wrong. Just relax. And then when I get back on April 1st, no, that's not an April Fool's joke, we'll take a look at what is going on and what's transpiring. What would make me come back to reach out to you all? If something really terrible takes place, I will reach out through the YouTube channel. I guess just check the community tab on my YouTube channel. Otherwise, it'll be quiet. I won't have anything up there. So with all that said, don't be afraid. It's not a reason to be fearful. Prep. Top off your food and water preps and your over-the-counter medicines and your household cleaners and things that you use, dog food, pet food. If you have infants, stock up on extra diapers and formula. So, it's kind of weird seeing all of it come true, isn't it? It's like knowing what the newspapers and television programs are going to talk about years before it happens. Wish I was wrong. So we're looking at the dollar index. This is our daily chart. And that blue shaded area, we finally got up into that area, and look what it hit. Consequent encroachment. Look at that. Right there. So we did trade higher on dollar. We did trade into the imbalance. We only got the consequent encroachment. We ran out the high, and we gave up a little bit of that range. So with the fact that we've pulled back like this, I want you to go with me into the euro. Notice that the euro didn't trade down deeply as you would expect in relationship to what the dollar did. See that? Yes, it went lower on the euro, but it wasn't as more stronger of a move, I guess I'm trying to imply here, because there's an imbalance member on the weekly chart that I don't have on this chart. I apologize. But it didn't quite get into its imbalance as much as I would have liked to seen it do in relationship to what the dollar index did. So in other words, I'm not going to go out on a limb and say that's SMT divergence. But to me, it just, I would have expected a little bit more from euro on the downside. And we came back pretty quick, back inside of the range between the high and the low. What this indicates to me is they are at the central bank level building up liquidity. They want liquidity to build up on both sides here and here because it's still early. Yeah, Russia's stomping around inside Ukraine, but it's not as bad as the media is making it out to be yet. Now, I'm not suggesting that anyone getting hurt, having things destroyed, cars ran over by tanks, all those things. I'm not suggesting any of that or anyone dying is a non-event. It is obviously a significant event, but not to the degree that they're priming people's imaginations like it's World War III right now. It could lead to that, but because it's so early, we don't know what the blowback is going to be or where the next intense moment will manifest as a result of all this. So they're keeping things still in a range. I don't believe that the markets are going to remain like this. Okay, over the coming weeks, something's going to happen that's going to cause these markets to snap out of this range. Like I said, I don't think the whole month of March is going to see this type of price action. If it does, I'll be completely surprised, but I don't think it's going to. I think they're going to, at the central bank level, create some kind of chaos or deliver price as a result of some kind of event. Black Swan event, a major bombing. But we did get below that low here, so we ran up the low on the sell side. And on the British pound, I mentioned we would run for the sell side here. And the imbalance right there. We got into that with these order blocks. Traded down into it. Didn't quite get to the very low end of the fair value gap or BISI. But we snap back up inside the range again. Gold, I mentioned that we would trade above this level here. And I took your attention out to the weekly chart. There's relative equal highs, and it ran right up into that. Look at your weekly chart on the continuous chart on TradingView. So in other words, in the symbol box, type GC, and then when gold futures comes up as a selection, tap that, and then the first one in the list, that is your continuous chart. That's what I'm plotting here. And you'll see that we ran right up into that relative equal high, almost like magic. Went right up there and then quickly gave up the ghost. Notice that the dollar and gold both rallied and both failed. That to me is indicative of nobody's willing to produce a sustained price run yet. So we have to wait. Ideally, one of them should have failed and the other still kept going, because they should be inversely related to one another in terms of directional bias. We're still seeing them paired up. Initially, that's fine, but still now, I was expecting something more of a decoupling, and we don't have that. We have them moving in tandem. The S&P 500 E-mini futures, I'm only showing this one because on the YouTube channel you can glean my observations from that index versus this one here. The S&P has a little bit more oomph, more stamina, more strength to the upside. It was a lot more punchier after it took out its short-term low back in here. So we traded down below not only that low, but that one here, and we had a really nice run. So watch this high here. Okay, I mentioned and taught a lesson on the YouTube channel called Purge and Revert, and we're seeing it go down below here, and 3 days back, a high 3 days ago, that would be here. Okay, so it's taken a pretty good stab at that. Bearish order block here, but we have a little bit of an imbalance here, like you'll hear me talk about on the YouTube video tonight. So it might want to trade up into that, and then maybe if it's going to continue lower, we'll watch and see at that point. Otherwise, if we trade above this gap and then come back down into its support, relative equal highs, is most likely where it's going to go for. I can't imagine it doing it, to be honest with you, but you know, so far this year's been pretty surprising. It's done a lot of weird things, so nothing new would be shocking to me. And crude oil traded above $100 a barrel, so we got that, but then it failed and it traded back off of its high as well. So we do not have any follow-through yet. You're going to be without my experience, and I'm trying not to say this like you need me, because I don't want that ingrained in your subconscious, because you don't need ICT, but only because there is a exorbitant amount of risk in the markets right now. It would be foolish for you to try to do things when you're not that skilled yet, because these markets, admittedly right now, after what we've just seen, I don't know what any of these markets are going to do next. And it might sound like a cop-out because I'm getting ready to go on holiday, but I'm being honest. They delivered exactly what I was looking for in their runs, except for dollar not going over 100. But everything else is done what I said it was going to do. But as soon as it did it, right back to the initial range that was in before it ran there. So what I gave you in reference to Wednesday's midweek commentary, every market hit its objective, except for dollar. Now, I don't know if crude oil is going to go lower. I don't know if gold is going to go higher. I don't know if crude oil is going to go back above 100 and keep on running. Like, I don't know. I sincerely want to stress that it would be gambling to assume, especially for the newest members that are here, do not try to navigate in the month of March in my absence. If you do, and you hurt yourself financially, do not email me. Don't tell me about it because I don't want to know. I'm warning you now, things could get intensely volatile in such a way where it may not be tradable. I don't have an answer for a market that has the bottom fall out. I don't have that. That's just ruin. And we are in a condition right now that could absolutely cause ruin. So, use the entire month of March to get all your videos downloaded. At the very minimum, month 1 through 6. Core content lessons and the commentary that was below those 8 lessons each month. So it's 28 videos times 6. All of you can download those in my absence over the next couple of weeks by April 1st. So, this weekend, you should be taking that time also to download, get a head start on it. And just kind of relax and prepare your home as best as you can. For those of us in the United States, if they hit the internet or take the grid down, you won't be able to get to the internet to download these videos. But if you have them downloaded, at least you have them, and you can watch them remotely and study in the periods that you have available should things get really ugly. I don't know if it will improve in the month of April. So that way we understand one another. Like, I don't know what's going to happen. Like, I'm at the end. I don't have any more opinions. I don't have any expectations that would line up with something. I would need more information. And I would have to see things unfold more than they have to get, an opinion. I just don't like the climate right now. The risk is through the roof. And it's frankly not worth risking ruin. Like, I don't see this as a mega trade like I'm expecting for the grain markets later in the year. That's something later in the year. Even though they ran up a lot, I'm not convinced that they're done. The bigger move, I think, is still coming. But we have to have some kind of a consolidation where the open interest gives us that confirmation, if you will. We may have a swan or black swan event where, let's say there's a tactical nuclear bomb used by someone in one country or another. That's going to cause wild, crazy volatility, and it could create a huge gap in price that none of us could weather that. So I don't want you thinking that you can cowboy up and get out here and do what you want to do and ride these waves of volatility and there's really no risk. There is absolutely incredible amounts of risk right now. If I wasn't going on holiday, I wouldn't be trading at all. And the only reason why I'm talking to you is because we are a community, and I don't want to just say, don't do anything until I touch base with you next time. that to me is, that's not good enough. So I'm giving you all the reasons, the details, and the why. And why not? So I mentioned how we were in slow periods, and then I said we would heat up, and I told you attention should be placed on the indices. We had some movement there, a real nice run there. And now we're back to sitting on our hands again. So all of you, every group that's been with me, knows that these are temporary periods. And then we wait for the market to provide us better conditions to work with. Right now, none of you can look at these markets I've outlined and shown right now. None of you have a clear idea with any of my tools what they're going to do. As the author of them, I'm telling you, I don't know. So if I don't know, and I'm not willing to risk, then guess what? That should relieve you of any anxiety about having to do it yourself. Just get your videos downloaded in March. Try to get as many, if you can get the whole 12 months downloaded, then do that. Because there's absolutely plenty of time to do it. Like, you literally could do 1 month each day, in the evening time or in the morning, whenever. Just right click on them, save target as. That's all you're doing. And you put them in their respective directories that you would create on your own computer. and that's it. So hopefully we are all safe and sound, and we can meet one last time before I go away on holiday on Monday evening. I'll give you a video there with some suggestions on what you should be studying if you have all the videos downloaded. But if you don't have the videos downloaded, don't do any of the things I'm suggesting you study on the video for Monday. Okay? If you procrastinate and you do not get these videos downloaded, and you email me after June 1st and you say, can I get the videos for, my answer is going to be no. Okay? You have plenty of time to download them. You have my blessing. You have my permission. I'm encouraging you to get them downloaded. You should have already had them downloaded. But now you have ample time to get it done. So do that. And that, my friends, is going to be it, because there's really nothing I can suggest or outline here for any benefit to anyone. So you have your mission in front of you now. Get these videos downloaded and enjoy your weekend if you already got them downloaded, and I'll touch base with you on Monday. And I have a video on YouTube tonight, so it's something extra. I think you'll like it. It's a little bit of a proof type thing. Not that you guys need it, but I got asked, can I show what it would look like if I was using micro accounts, and if I was starting with $10,000 and not trading the mini like I was doing most recently, running that account up. I ran the account up almost to $300,000 this morning and overnight. So I got to the point where, okay, now it's absurd. Nobody's going to be able to relate to that. So I backed it back down to 10,000, and I used one of the suggested ideas I got from a TradingView question or comment. One of the guys were like, can you show trading a micro? Because I don't think you can make a lot of money trading micros. And it's not about making a lot of money. It's about making a percentage. And that percentage does the math. It's the heavy lifting by percentage. If you have compounding interest and it's consistent, time and compounding, that does all the heavy lifting. So it's not a lot of money that's required. It's a lot of consistency doing the same things that lead to a rate of return that will compound over time. So I think you'll find it insightful. And until I talk to you Monday, enjoy your weekend and please be safe.